What's up, everybody? Welcome back to Trades and Gains, the show where the Federal Reserve gently adjusts interest rates like it's tuning a violin. Except the violin is the U.S. economy, the strings are fraying, and while Jerome Powell is blindfolded, sweating, and probably wishing he stayed in private equity at this point. So yes, it's FOMC week, the week when, well, markets pretend to be rational, economists pretend that they know things, and CNBC pretends this isn't all vibes. And guess what? Well, this time the Fed is probably cutting rates for the third time this year. The third time. And the Fed is cutting rates more often than Tesla is announcing a new product category. Also, let's talk about how 11 out of 12 FOMC members expect a 50 BPS rate cut in 2 days. I think that's a little weird, but anyways, moving on. We're in the third time, all right? At this point, Powell's going to walk on stage and basically say, surprise, the Fed is now a subscription service where the more people that subscribe to our $9.99 a month service with no ads, the higher likeliness that we will continue to cut rates. And you can also pay $15.99 for our premium. At this point, just open an OnlyFans, right? So let's talk about it. We're cutting or not, or yes, but also no. So the consensus is yes, a 25 BPS cut. The Fed says, calm down, don't get excited. And the bond market says, we already priced this in 6 months ago, you slow bastards. Even Alan Binder, the former Fed vice chair, says he expects a hawkish cut. A hawkish cut. Only the Fed could combine lowering interest rates with don't get too happy about it. It's basically like if your boss gave you a raise and said, make sure you don't spend it because you don't deserve this. And apparently dissent is coming from both directions. The Fed's own version of Thanksgiving dinner, except without the Trump. Actually, Trump will be involved in it. So on the no-cut side, we have Susan Collins, Jeff Schmid, and Austin Goolsbee. By the way, Goolsbee's been in the corner like shitting his pants for the last 2 months because he does not want to cut rates because he keeps saying inflation is still above target. Stop giving the economy Red Bull. We don't need it. On the cut the damn rate side, we have John Williams, the vice chair. We also have a bunch of exhausted economists who are currently attached to oxygen tanks and probably half the stock market praying for lower margin loan payments. Williams said he could support a further adjustment toward neutral. The translation is, my 401k is down, just cut the damn rates already so my wife doesn't leave me. And because Williams rarely signals strongly without Powell's blessing, the street basically heard, Daddy finally is opening the purse strings. Now let's talk about the inflation data that's missing, I guess we could say, because let's talk about the data. The elephant in the room, and no, I'm not talking about your mom. We're talking about the lack of data that we have seen since, well, the government shutdown. Because the government shutdown delayed the inflation report so badly, the Fed is basically making decisions blindfolded while spinning on a chair. The last PCE reading Powell saw was so old, it probably still had a Blockbuster membership card. Core PCE is at 2.8%, trending down, but it's still above target, still sticky, still reminding Powell of that 1X that keeps texting, we're not done, I'm sitting outside your house. Then you have the labor market. Jobs fell in June, they rose back up in July, they fell again in August, then they rose again in September. It's less a labor market and more a drunk guy on a pogo stick. And the beige book is even worse. Layoffs are ticking up, hiring freezes, hours are cut, AI is replacing entry-level workers, and shout out to all my recent college grads, you have just as good of a chance as that burnout in high school who only got a diploma to get that tech job, because guess what? Your degree doesn't matter. You were just another unfortunate member of the scam that they like to call college, where unless you're going to be a doctor, a lawyer, or anything else, you could use YouTube University to become a coder today. By the way, This is all great news unless you're an entry level worker. Sorry. That's why I'm happy I'm in my mid 30s because I don't have to worry about that. Now, let's go ahead and talk about some rate cut scenarios so you can decide how you want to end yourself. Let's go ahead and break down the actual possibilities here because Wall Street loves scenarios almost as much as Hollywood loves child actors, probably a little too much. So, scenario one, the classic 25 BPS cut plus hawkish messaging. This is going to be our most likely scenario. Powell walks up and says, "We're cutting, but don't think we're cutting again. Seriously, just stop asking." The market reaction to this, stocks are going to go up for about 20 minutes. Bonds are going to say, "We already knew this." The dollar is going to act like nothing happened. And Twitter economists are going to say, "We were right, probably, but nobody fact checked this because I already deleted all my other tweets that gave incorrect information." So, this is the Fed equivalent of easing off the gas pedal, but telling the passengers, "Don't touch the aux cord because I'm still driving." Now, scenario two, the no cut. This is going to be the shock and awe edition of this. This is very low probability, but just imagine the chaos. It would be like when the Joker broke out of jail and shot that guy on national TV. Powell, well, no rate cut today. The stock market, so we die. And the S&P would drop so fast the SEC would issue a statement saying, "We're working from home today." Crypto, Bitcoin goes from 84K to 72K in about 17 minutes. And, well, Michael Burry, he's going to print an 8-page Substack that's titled "I Told You So" in size 48 font because, well, half of his audience are a bunch of 70-year-olds who can't see shit. Anyways, scenario three, we have a 25 BPS cut plus a dovish surprise. Now, if Powell goes dovish, oh boy, the NASDAQ, it's going to be up about 4%. Semiconductors, every chip stock becomes a meme stock like AMC back in 2020. Nvidia is going to add $200 billion into its market cap for absolutely no reason. And then the tech bros, they're going to pop champagne and cheat on their wives and thank Powell in their nightly prayer circle jerks that they all do in their private sections at their favorite club. This is the Fed heard you crying on Twitter scenario, by the way. Now, the fourth scenario is the triple cut 2026 path. Some economists think 3 more cuts are coming next year. Now, why? Not because inflation is fixed and not because the economy needs it, but because Powell might not be the Fed chair anymore and the incoming chair may be a different flavor of monetary Kool-Aid, aka I'll do whatever Donald Trump tells me to do, or I will probably lose this job and not go up for re-election. B of A literally said future cuts will be the result of leadership change and not economics. Imagine that. The world's biggest economy making decisions like a high school student council election or like the hot girl in high school who decides to finally give up her virginity. Probably not a great decision making process that's going to be baked into that. Granted, any high school student making decisions is probably someone you don't want making decisions. Now, the real problem is the labor market is sitting here and it's weird, weird, weird. AI is replacing entry level workers, immigration policy changes are shrinking the labor pool, tariffs are punching businesses in the face, and companies are protecting profit margins like Gollum guarding the One Ring. All of this adds up to a labor market that's not hot, not cold, but just lukewarm and aggressively meh. Cutting rates won't fix the following: worker shortages, tariff uncertainty, AI disruption, and babies choosing not to be born. But hey, it will make stocks go up. And as we know, that's America's real economic indicator. Also, about the babies choosing not to be born, that's probably not that hard of a decision because currently our generation is having the least amount of sex that has been seen in the last like 30 years. So hats off to us because we definitely don't want to repopulate. We're about to be looking like Japan in probably the next 5 to 10 years. Now, let's talk about some inflation risks. Are we pouring gasoline on the fire? Well, Blinder says if the Fed keeps cutting, we risk persistent inflation. He actually said we may be at risk now. The translation, we're playing Jenga with the economy, and Powell, well, just pulled out a middle block with one hand, blindfolded. Inflation is not just about tariffs anymore. Service inflation is sticky as Gorilla Glue. Shelter inflation refuses to calm down. And while healthcare inflation is smiling like it knows something we don't. If rates keep dropping, well, guess what? Inflation may decide, oh, we're back. Did you miss me? Now let's talk about the 2026 rate cut path. Pick your fighter. Economists are divided. 3 more cuts. This means because employment will rise, because jobs are weakening, because the Fed wants to avoid a recession, and because fiscal stimulus hits in 2026. 2 cuts, well, this means because a new Fed chair wants a clean slate, because politics exist. 1 or 0 cuts, well, because inflation stays too high, because Powell gets nervous, because the bond market says stop. And if there's more cuts than expected, this happens only if unemployment surges, job losses accelerate, AI displacement spikes, tariff crushes margins, or option 5, Powell wakes up and just chooses violence. So here we are, waiting for Powell to tell us whether money is expensive or slightly less expensive. The Fed is cutting rates like a doctor prescribing medication without test results because the test results were delayed by a government shutdown. We're living in a simulation and the Wi Fi is lagging. Inflation's not fixed. The labor market's confused like a bisexual teenager. Tariffs are slapping manufacturers. AI is firing interns faster than HR can process the paperwork. And somehow the answer to all of this is, you know what? Let's just cut rates again, guys. Oh my God. But hey, this is America. We don't solve problems. We create problems and then blame it on other people because that's the American way. We lower interest rates and hope the stock market buys us dinner first before they fuck us. So see you Wednesday after the FOMC meeting, where I fully expect Powell to walk out with a magic 8-ball labeled soft landing. I hope you guys have a great day. Make sure you subscribe to Investor Central Club, where you can get real-time options flow with actual options like data. So be on the lookout for that. InvestorCentralClub.com. Use ERULOVESTACKS to get 20% off your first month. I'll see you guys in the next one. Have a great rest of your day. And if you're over on Free Wi-Fi Radio over on Twitch, come and join us. Catch you later.